Hold on for 10 seconds with me while I bring to you some breaking news. And make sure you hit the subscribe button so you never miss an important update like this. The headline just dropped, and it could reshape the entire XRP narrative. Ripple's longtime CTO, David Joelcatz Schwartz, has announced he's stepping down from his role after more than a decade. And yet, before you jump to panic, here's the twist. Schwartz isn't leaving Ripple. He's transitioning to the company's board of directors. This is massive, and if you hold XRP, you need to understand exactly what this means. For context, XRP is trading around 285 right now. And remember, if you're watching this later, the price may have shifted. This isn't financial advice. Always do your own research and consult professionals. But let's be clear, this is not just a personnel change. This is a strategic rebalancing at one of the most important blockchain companies on the planet. David Schwartz isn't just another executive. He's one of the original architects of the XRP ledger, a figure that has been synonymous with the project since the very beginning. His fingerprints are everywhere, from technical design to scaling debates to guiding XRP through its toughest regulatory battles. The news that he's stepping aside from the day-to-day CTO seat sounds dramatic. And make no mistake, it is dramatic. But when you zoom out, it's less about exit and more about evolution. Think about it like this. In the early days, Ripple needed Schwartz as a builder, the technologist who could answer questions in the trenches, who could write, review, and guard the code. But Ripple today isn't the Ripple of 2013. It's a global company, integrated with financial institutions, navigating complex regulation, and sitting at the heart of trillion-dollar conversations about tokenization and settlement. At this scale, the role of board governance becomes just as important as engineering leadership, and that's the seat Schwartz is now taking. Why is this good news? Because it signals Ripple is maturing into the institution it needs to be. The projects that win in the long run are those that evolve beyond charismatic technologists into structured, governed, institution-level players. Look at how Ethereum has shifted from Vitalik-driven to community and foundation-driven. Look at how Bitcoin thrives without a CEO. XRP moving in this direction isn't weakness, it's resilience. Now let's zoom in on timing. Why now? Schwartz himself mentioned wanting to focus more on family, but also hinted at exploring other use cases for XRP beyond Ripple's current roadmap. That's telling. It means that even as Ripple continues building core payment rails, Schwartz may expand the universe of XRP utility from another vantage point. From the board, he can push those visions forward without being buried in daily engineering. That's influence with leverage. Ripple CEO Brad Garlinghouse responded with humor and admiration, joking, "Wait, does this mean you're my boss now?" That lighthearted moment matters because it shows unity, not fracture. Garlinghouse framed Schwartz as a legend, one of the smartest people in crypto, and confirmed that Ripple isn't losing him. It's repositioning him. That's a crucial message for investors, institutions, and retail alike. But here's the hook you cannot miss. Retail investors are conditioned to panic at headlines. They see CTO resigns and immediately assume weakness, fragility, instability. Meanwhile, institutions read between the lines. They see a maturing governance structure, a company preparing for its next growth cycle, and a board enriched by a visionary who knows the ledger inside out. Which side do you want to be on? The panic sellers or the ones who understand evolution? This is where context becomes critical. Ripple has just spent years fighting the SEC and has emerged with clarity. XRP is no longer in the fog of uncertainty it once was. Institutions are circling. Tokenization markets are heating up. Trillions in assets are preparing to go on-chain. At this exact moment, Ripple strengthens its board with a legend while opening the CTO chair to fresh talent. That's alignment. That's momentum. Let's put this in perspective. Schwartz moving to the board doesn't remove him from the story. It etches him into it permanently. Board members don't chase code commits. They shape the future. They direct strategy, governance, alliances, and long-term positioning. And for XRP holders, that means continuity of vision, even as the company scales up its leadership team for execution. This is the part that should leave you leaning forward, not stepping back. The projects that survive cycles are those that mature, evolve, and institutionalize. Ripple just took a huge step in that direction. Stay with me because in just a minute, I'm going to break down exactly how this shift could accelerate Ripple's roadmap, position XRP as a more attractive institutional asset and trigger the next wave of adoption. But first, take a deep breath and let the headline sink in. David Schwartz, the technologist, is becoming David Schwartz, the strategist. And that may be exactly what Ripple and XRP holders need right now. Here's where we need to slow down and really break this down step by step, because on the surface, a CTO stepping down looks like a red flag. But when you map it onto the bigger liquidity and institutional picture, it transforms into something much more bullish. So let's walk through it in order. First, think about the mechanics of a transition like this. In technology firms, especially in crypto, leadership exits often happen abruptly, sometimes with tension, sometimes with silence. But this was announced with celebration, unity, and clarity. There's no mystery departure here. It's not a founder storming off in frustration or an exec poached by a competitor. Schwartz is stepping into the board, not walking away. That's the opposite of abandonment. That's permanence. Second, consider the signal this sends to institutions. Major banks, asset managers, and payment providers don't want to integrate with a company that looks like a personality cult. They want structure. They want professional governance. They want to know the visionaries are still involved, but in the right place. Guiding strategy, not bogged down in daily code sprints. Schwartz shifting to the board provides exactly that. Institutions can look at Ripple and say, the grown-up table is set, the governance is in place, and the visionary remains in the room. Now let's layer in the macro environment. Global finance is in one of the most fragile phases we've seen in decades. The Japanese carry trade unwind is shaking bond markets. Liquidity stress is building. Central banks are boxed in between inflation and growth slowdowns. In moments like this, institutions hunt for rails that can provide efficiency, speed, and certainty. Ripple has always pitched XRP as the settlement asset for those rails. With Schwartz now at the board level, Ripple can engage more directly with policymakers, regulators, and institutional partners at the highest levels. That's not just tech leadership. That's geopolitical influence. Here's the midway retention spike. Don't miss this next 60 seconds, because this is the single most important takeaway behind the resignation. What Ripple just did is upgrade Schwartz from being the guardian of code to being the guardian of vision. That means instead of being reactive to engineering fires, he's now proactive in shaping Ripple's next decade. And if XRP is going to become the backbone of tokenized treasuries, cross-border settlements, and central bank integrations, that vision matters more than any one technical patch. But let's not ignore the market psychology. Retail hears resignation and thinks collapse. Institutions hear board appointment and think maturity. This divergence is the setup for the next wealth transfer. Retail may sell their XRP in fear, handing supply over to stronger hands, while institutions accumulate with a smile. It's the same cycle we've seen for years. Headlines spook the crowd, insiders read between the lines, and the ones who hold conviction reap the rewards. And here's where it gets fascinating. Schwartz has hinted he's been exploring other use cases for XRP beyond Ripple's immediate focus. From the board, he now has the bandwidth and platform to push those ideas forward. Imagine what that could mean. Tokenized commodities on the XRP ledger, decentralized identity solutions, even applications in AI-driven finance. If Ripple's execution arm stays focused on payments, Schwartz may drive the next expansion wave of XRP use cases from the strategy side. That's leverage no CTO can have while buried in technical execution. Think about how this mirrors other tech evolutions. Bill Gates transitioned from CEO to chairman, shifting from daily operations to shaping long-term strategy. Steve Jobs, after his return to Apple, moved into a role that was far more about vision than execution. Schwartz is stepping into that same category. And when visionaries move to the board, it often marks the inflection point where a company shifts from scrappy builder to global powerhouse. Now let's zoom out again. XRP today sits at the nexus of some of the biggest themes in finance: tokenization, stablecoin competition, cross-border liquidity, and regulatory clarity. For institutions weighing whether to adopt XRP, seeing continuity of leadership, Schwartz not disappearing but ascending, could be the reassurance they needed. It proves that Ripple isn't fragile, that its leadership isn't fracturing, and that the very minds who built the ledger are still steering the ship. So what's next? Expect a dual-track Ripple. On one side, a new CTO will step in, bringing fresh perspective, likely more focused on scaling, integration, and enterprise-grade stability. On the other side, Schwartz will now operate as strategist-in-chief, weighing in on new verticals, broader adoption plays, and institutional partnerships. That's a division of labor that makes Ripple stronger, not weaker. Stay with me, because in the next section, I'm going to take you inside the liquidity dynamics that tie directly into this transition: shrinking exchange supply, ETF absorption, And what happens when XRP's leadership shakeup coincides with the most constrained liquidity environment the asset has ever faced? What I'm about to lay out flips the script completely, and it's something almost no one else is talking about. Liquidity is the lifeblood of any market, and XRP is no exception. But unlike other assets, XRP's liquidity is already under unique pressure, and this leadership transition couldn't come at a more telling time. Exchange balances have been quietly draining for years. The visible float of XRP available for trading is shrinking. Custody solutions, OTC deals, and institutional cold storage are pulling supply off exchanges and locking it away. From the outside, order books look fine, but under the surface, the lake is running dry. Now picture what happens when institutional vehicles like ETFs begin absorbing supply at scale. They can't rely on retail drip feeds, they need guaranteed blocks of liquidity. That means custodians will compete with exchanges for the same shrinking pool. This isn't just a matter of higher prices, it's a matter of gaps. In stressed conditions, liquidity doesn't move smoothly, it jumps. You could see XRP trade at 320 one moment and 480 the next, with no fills in between. That's what a supply shock looks like. Here's where Schwartz's new role matters. As CTO, his focus was on building and protecting the system. As a board member, his influence extends to positioning XRP within this tightening liquidity cycle. He knows the ledger. He knows how ODL corridors function. And now he's in the seat to align Ripple's corporate strategy with market realities. That combination, shrinking liquidity plus a strategist who's been here since day one, could turn this resignation headline into the very trigger for XRP's next revaluation. Don't click away yet, because in the next 60 seconds, I'm going to explain why retail psychology is about to collide head-on with this liquidity crunch. The majority of retail traders still believe they'll see the move forming and have time to act. But that's not how supply shocks unfold. Institutions accumulate quietly, retail gets bored and sells, and then one day, demand surges through a shallow market and prices leap with no warning. By the time retail reacts, it's already too late. That's why today's news matters so much. Headlines like CTO resigns tend to scare the weak hands. But those weak hands are exactly what institutions feed on. They're the liquidity release valve. If enough retail panics out, XRP supply flows right into stronger hands, funds, custodians, and early ETF allocations. And once it's absorbed, it doesn't come back. That's when the real move begins. Think of the psychology in phases. Phase 1, liquidity crunch. That's where gaps happen, retail panics, and headlines scream. Phase 2, utility scaling. That's when ODL corridors, stablecoin flows, and tokenized treasuries begin using XRP at scale. That utility doesn't care about price charts, it's about necessity. Phase 3, institutional dominance. By then, retail has mostly been shaken out, and the remaining float sits consolidated in custody wallets and funds. That's when XRP stops being speculative and becomes infrastructure. Schwartz stepping into the boardroom at this exact moment means Ripple now has one of the original visionaries directly involved in shaping how the company navigates these phases. He's not just watching the liquidity squeeze from the sidelines, he's helping design how Ripple positions itself in the middle of it. That's leverage most companies don't have when leadership shifts. And here's the kicker. When liquidity shrinks and institutions dominate, price moves stop being gradual. They become leaps. The old models of trend lines and slow accumulation break down. Instead, you get repricing events, the kind of overnight shifts that take XRP from $3 to $10 with nothing in between. Retail is conditioned to expect retracements, to wait for pullbacks. But in this new structure, those pullbacks may never come. By the time they realize it, the base price has reset permanently higher. This is why today's resignation is more than just a personnel story. It's a signal that Ripple is aligning leadership maturity with market maturity. The technical architect is now a strategic director, just as XRP prepares to enter its most constrained liquidity environment ever. For those who see it, this isn't bearish. It's the prelude to a structural revaluation. Stay with me because in the final section, I'm going to tie all of this together. The comparison of XRP versus Bitcoin and Ethereum, the macro backdrop of liquidity cycles, and why this shift could set XRP up as the asset that moves not just with speculation, but with necessity. And when you hear the punchline, it may leave you completely rethinking what today's news really means. When you step back and look at the broader crypto landscape, XRP's setup is unlike anything else. Bitcoin is capped at 21 million, and its narrative is digital gold. Ethereum is the backbone of DeFi, powering networks of apps, staking, and yield. Both are powerful, but both depend on retail cycles of hype and speculation to ignite their runs. XRP, on the other hand, was built for something bigger: utility at scale, institutional-grade settlement, and the liquidity backbone of global finance. And today's leadership shift only underscores that difference. Think about what just happened. David Schwartz, Ripple's CTO for over a decade, didn't walk away from the table. He didn't cash out, disappear, or distance himself. He stepped into the boardroom. That's not retreat, that's consolidation of influence. From the outside, critics will spin it as weakness. Insiders see it for what it is: a graduation. Schwartz has already proven his technical genius. Now he's positioned to guide Ripple's alignment with the institutions that matter most. Layer this with the macro environment. Rate cuts are looming. Liquidity cycles are turning, and capital is searching for scarce, high-utility assets. Every historical bull cycle has been powered by liquidity injections, and we're heading into one of the most aggressive pivots in decades. In 2008, cheap money fueled equities. In 2020, it sent tech and crypto vertical. This time, the cycle is landing directly on tokenization, settlement networks, and digital infrastructure. That's XRP's arena. Compare it directly. Bitcoin thrives on scarcity. Ethereum thrives on network effects. But XRP thrives on necessity. If banks, funds, and payment providers need instant settlement with minimal friction, there is no other option with the same scale. That's not speculation. That's demand baked into the plumbing of the system. And with ETFs, stablecoins, and tokenized treasuries pulling liquidity into on-chain rails, the demand side is only growing. Here's what most people miss. Structural revaluation doesn't look like a parabolic retail pump. It looks like a staircase: quiet accumulation, sudden repricing, new base price, then another phase. That's why leadership shifts like Schwartz's matter. They align strategy with the phases of revaluation. He's not stepping back just as the liquidity crunch hits. He's stepping forward into the exact position that lets Ripple shape how XRP bridges that crunch into institutional dominance. Psychologically, this is where most investors fail. They look at today's price, maybe $3, maybe a little higher, and they think they'll have time. They expect volatility, pullbacks, and chances to stack. But in an institutional cycle, those chances evaporate. Once supply is absorbed into custody wallets and ETFs, the retail model of buy the dip doesn't work. Dips get shallower, floors get higher, and suddenly the old entry zones are gone forever. Now zoom forward. Picture banks using XRP daily for cross-border flows. Picture ETFs holding billions of dollars worth locked away in cold storage. Picture stablecoins like RLUSD scaling directly on the ledger, feeding volume through corridors without ever hitting retail exchanges. That's not a meme coin environment. That's a structural market where price is driven by flows, not sentiment. And here's the part that should leave you dumbfounded. The calm you see now, the slow grind, the sideways charts, the headlines about leadership shifts, it's the silence before the storm. History shows us that by the time retail realizes what's happening, the revaluation has already occurred, the window is closed, the base price has reset, and the opportunity has passed. So don't misread today's news. David Schwartz leaving the CTO seat is not the end of an era. It's the signal that the next era is already here. The architect is now a strategist. The system is built, the rails are live, and the institutions are circling. And the question you have to ask yourself is simple. When this storm finally breaks, will you be holding? Or will you be watching from the sidelines wondering how you missed it? Because make no mistake, the silence right now is temporary. The revaluation phase is closer than most people dare to imagine. And when it hits, the world won't be asking whether XRP can rise. They'll be asking why they didn't see it coming. Like, comment, and subscribe for more content like this.